Hey, what is going on everyone? Welcome to another video. In this one, we are going to be going over the daily buys for dummies featuring the TTrades Fractal Model. So this is going to be a video where you will find daily buys for certain days of the week. Every trading day does not have a bias in how you can avoid those days and how to focus on the high probability and the true expansion days. Starting with the introduction, the daily bias is obviously a foundation of every trade you take, and this will sound repeating, but this is going to be a framework where you will be expecting certain days of the week to expect a bias from, and you will avoid the lower probabilities or the reversal days. And this is a kind of video where you have very confirmed and one-side narrative. So we'll be using the TTrades Fractal Model and the MMXM's next day model. Shout out to TTrades. All the concepts I'm using in this video are taught by him. So first of all, we have to remove the clutter, which is trading the reversal candles, trading every day, and trading the days where we have large wicks and noise. So you will not trade the reversal candle, which is the second candle of the swing point. You have to avoid this at any cost, and I'm going to be going over this in the examples. And the daily time frame, you will be trading the candle 3 or the candle 4 of the swing point, which are the confirmed candle and one-sided bias candles after the candle 2 is being printed. This will remove the 60 to 70% of the confusion you have about the daily bias, which is making you to trade every day and making you to revenge trade, and you have fake bias, and you are going into any trading day trading the both sides of the market, which is the foundation of our trading and fake bias. Revisiting the swing point. A swing point is a 3 candle formation or pattern where number 1 is the first candle of the swing point. We don't have to do anything with this. We have to focus on the middle candle, which is that rejection or reversal candle, which we call the candle 2 and a swing point. So when we are creating a bearish swing point, the price reaches into a key level, which can be a fair value gap, an order block, a high or a low or SMT divergence with the correlated asset, and we are having the candle 2 closure. What is the candle 2 closure? When the candle 2 is closing inside the range of the candle 1's wick. So this closure inside is indicating a reversal or a V-shaped reversal on the lower time frame within this candle, and you will be trading the candle 3, which is the expansion away from the candle 2, and then the candle 4, which is also the expansion away from the candle 3. And this is optional, but most of the time you will get a candle 4 expansion away when we are not reaching towards a drawn liquidity. And this is the only way you can avoid overthinking, confusion, and everything you have about the daily bias, because with this the daily bias is very easy. And same for the bullish swing point, you have to let the candle 2 of the swing point print. This could be a bearish candle or a bullish candle, but ideally you want to see a bullish candle because the candle is closing into the highs, which is making the next candle to obviously be an open low high close or a bullish candle. And same for the candle 4th expansion, also respecting the 50% of the candle 3 and expanding higher to the drawn liquidity. And if the candle 3 is reaching towards a drawn liquidity, we can get another swing point, for which you have to wait for another C2 to print and then trade the C3. Now using the daily time frame only. Why is that? Because inside a weekly candle you can get multiple swing points. For example, Monday will create the low of the day with a swing point, it will expand higher, and then midweek we will be reaching a drawn liquidity or a key level, and we will be creating another swing point bearish. So you have to only focus on the daily time frame, because inside a weekly or a monthly candle there are multiple swing points and you don't have to miss on them because the weekly candle is bullish. So I'm going to be longing every day. Now wick size and candle body formation, I have went through this in my previous video, but when we have a small wick we are printing large body, and when we have large wick we are printing smaller bodies. This is the historical nature of the price action. You can see it on every time frame. Now wick size tells you how much range in a candle is left. Like for example, if we are creating a large wick, then we are not expecting a huge body. That is why we are trading the C3, because ideally we want to see the C3 to create small wick and then expand in the direction of the swing point. Now understanding each candle, candle 1 is setting the idea, candle 2 confirms the direction. We will be trading away from that reversal wick to the other side if it is bullish or bearish. And candle 3 is your trading candle, whether you expect an open low high close or open high low close candle. And candle 4 is an optional continuation of the daily candle formation. This is very important because when we are expecting expansion within the candle 3, then we have two types of candles. Either in a bullish swing point we will be printing open low high close, In a bear swing point, you'll be printing open high, low, close candle. Now in a bullish swing point, we are expecting the candle 3 to create it open, low, and then high and close into the highs. These are the indications of the expansion candle, and this will also save you from the invalidation of the price, because if we are going into the candle 3 and we are taking the previous candle high and aggressively reversing lower, then your idea of a bullish swing point is now invalidated. So you have to keep in mind for the next day, which is a candle third, we are expecting an open low high close or an open high low close candle, and these can be done through the daily profiles. When London reverses or creates a low of the day, then we call it London reversal. When the Asian session reverses, we call it Asian reversal. And when the whole day is consolidating or making opposing run and the New York reverses, that is called the New York reversal profile. And in the London and Asian reversal, when we are printing large range, you will avoid the New York session because we are spending most of the daily body in those sessions. We are not expecting a continuation in New York, and in the New York reversal profile, we're expecting most of the daily body to be printed in the New York session. Now, fake out versus invalidation. This is the most asked question. When we are trading the candle 3 of the swing point, sometimes we are taking the previous day high in a bullish swing point. So does this invalidate my idea? We are going to be going over this. When we have bullish swing point forming, like we have a C2 reversal, and the candle 3 of the swing point is taking the previous day high first and then going aggressively lower. So does this invalidate my idea? So we have to use few things. The first one is when we are taking the previous day high or the C2 high, and we are aggressively reversing lower, disrespecting the 50% of the wick. So that means we have invalidated the idea, or we will be printing a large wick and then reversing higher, which will leave the candle 2 low as a failure swing. So this is the invalidation of your advice. But sometime we will be having a fake out where we have printed the candle 2 of the swing point, then the daily candle opens up, taking the previous day high, and then kind of the Judas swing or a fake move, then later confirmed by when we are respecting 50% of the candle and then going in the direction again. So that means we have reached a high time frame key level, which was the previous day high. We had another phase of price delivery, which was a retracement or consolidation. And then again, we are trading in the direction of the swing point and printing that expansion candle. So you have to focus on the price section. If it is retracing or instantly reversing lower, and you have to wait for it to give you the signature, a change in the state of delivery intraday, or reaching a key level within the 50% range and get inside with the distribution again higher. So this is the type of fakeout we have to avoid, and sometimes it do invalidate the idea and it is straightly going for the candle too low, which you have to wait for a new swing point to form. Now this is it for the PDF. Now I'm gonna go over the examples of how you can trade the candle 3 up the swing point with a calm mind, with no confusion, with no fake bias, and how you can get inside with the true bias. So starting with the first example, here I'm on the EURUSD daily chart. So we have a daily candle 2 closure. We took the previous day high, and technically this is an SMT divergence. The GBP/USD has taken that high, and the EURUSD is the weaker asset. So now we do have a candle 2 closure, and we are expecting an open high low close or bearish expansion candle. What can be our draw on liquidity? And the daily chart, this swing low lies far below, so we are going to be targeting the previous daily low. So now dropping down to the 1 hour chart. So dropping to the 1 hour time frame, as you can see, the change in the state of delivery or the consecutive series of up close candles lies right there. So we're going to wait for this candle's closure, and we are going to trade the continuation or the candle 3 of the swing point. But let's say I'm taking entry within the candle 2, so I don't have a clue what the daily candle will do next because we have drawn liquidity far below right here. And let's say I'm entering at this hourly fair value gap. We have a candle 2, and I'm entering at the candle 3, and I'm targeting, let's say, 2 hour. And as you can see, my idea is invalidated because I don't know what will happen in the candle 2 of the swing point until it's closed. It can go back to the highs, it can close back to the lows, or it can even consolidate. So that is why I have to print the candle 2 of the swing point. The purpose of this entry was to show you why you should skip the candle 2s of the swing point. So now I'm waiting for this candle closure, and we will trade the candle 3 as an open high low close or bearish expansion candle. So now going into the next day, this candle closed into the opening price. But if we are respecting the 50% of this wick, we can consider a continuation lower. What would be the spot for us to reverse up? which will be this high because if the price is going above this and disrespecting the 50% of the candle's wick, then it is going to go for that high and create another candle. So ideally we want to see a reversal at this level. So waiting for the candle. And as you can see, we have printed a candle 2 closure right here. And also a change in the state of delivery, which is confirming the wick of the daily candle and a continuation order block. So if I'm entering now, I can say that we have printed the candle 2 of the swing point and we are expecting a candle 3 expansion lower. What can be my target? This previous low, because the next target lies right there and we cannot expand that much in a one candle. So I'm going to target this low, which is about 2R. And as you can see, going into the London session, we have expanded towards this low and we do have another continuation entry, a fair value gap, a candle 2, and then expansion lower to this low. So this is how you can avoid the clutter and the candle 2. We don't know the direction of the candle yet, and that's why you have to trade the continuation entries. We created an open high low close candle which has a small wick in supporting the daily profile with an order block confirmation. Now going into another example. As you can see, after printing that candle 2 of the swing point, we expanded lower to the previous day low, and now we have another candle 2 closure, which is a bullish one. And we are expecting the candle 3 to be an open low high close. Ideally, we want to see it create a low with a small wick and then expansion to the highs. Now we will go to the 1 hour time frame. Dropping down to the 1 hour time frame, the previous candle was expansion lower followed by an expansion higher, which was that change in the state of delivery, and we confirmed that reversal candle. And for the next candle, we are expecting again an open low high close candle or a bullish expansion candle. What's the area we're expecting this candle to create its wick or reverse up? First one is this fair value gap and the consolidation range low. So going into the London session, we want to see these equal lows get ran and then expansion in the other direction. Going into the 22 candle, we have manipulated those lows and we tapped into this fair value gap. And this is also the example of the candle 3 running the previous day high first. You don't have to change your bias because we haven't created that swing point yet. So I'm not going to be changing my bias and I'm going to wait for the confirmation to get inside with the distribution again. This created a high first, then ran the consolidation range low, and again it is going higher. So I'm waiting for the confirmation. And as you can see here, we have the confirmation, a change in the state of delivery in that same direction after running the previous day high. It retraced into that fair value gap, run those equal lows, and now expanding again in the direction. I can get inside with the distribution again, aiming for 2R. The rest of the session expanded higher. How simple trading the candle 3 is. We had a reversal candle. We waited a whole day for it to be printed, and then going into the next day, we want to see an open low high close or a bullish expansion candle. Since we have ran the previous day high first, we waited for a confirmation, which was that reversal in that direction, and we traded that continuation entry within the candle 3. So now we will hop into another example. After printing that reversal candle, we had a 3 days of expansion higher and we reached a key level, and we do have a candle 2 closure in the bearish direction. So since we have taken the previous day high and we aggressively close over lower, so this is now the candle 2 closure, and we want to see the candle 3 to be an open high, low close, or bearish expansion candle. So dropping to the 1 hour time frame. Now on the 1 hour time frame inside the reversal candle, you can see we had a very bad price action. We had multiple attempts to be bearish and we have taken this low, which on instant, if we are trading the reversal candle, we can say that it is going to go higher towards those highs, but it was not the case. So we waited for the whole candle to print, and now we have a candle 2 closure, a change in the state of delivery, and we are expecting the next candle to be an open high low close or bearish expansion candle. Now going into the next day, now we are going to use the wick logic. As you can see from the opening price, this candle has created a very large wick, and we have unestablished low of the day, failed swings, equal lows with this one. So what we are going to do is we are going to adjust our target. Since for an expansion candle, when we have a small wick, we're expecting a large expansion lower. But in this case, we have created quite a large wick. So we are going to be expecting targets, either the opening price or the equal low below the opening price. So now we have a reversal candle, which can be viewed on a 30-minute time frame. Or we are going to use the hourly candle. Let's say I'm entering here and putting my stop loss above the high, and I'm targeting this equal low, which is right about 2 hour. The price expanded lower into my objectives. We were expecting a small continuation towards the opening price of the candle, and we do have a continuation entry for the new session. We have a fair value gap and a high. The price ran it with a 9 a.m. candle, and then we had a continuation lower. This is from the recent price action, which is Friday, 5th of December, and I missed this entry due to the 10 a.m. candle creating a large wick, almost taking the previous candle high. So now going over the gold current week's price action, how you can find entries within the candle 3. So starting with the Monday's candle, we reached into that high, and we succeed to manipulate it, and we do have a candle 2 closure. It is not quite a closure, but using the daily profile, I can confirm this idea. I either skip this day, but since we have reached into a high at 3 days of expansion, and we have a candle 2 closure, so I'm going to be expecting a bearish bias either to this fair value gap or much lower. So this is the idea on the daily chart, letting the candle 2 of the swing point print, and now dropping down to the 1 hour time frame. So dropping down to the 1 hour time frame, as you can see in the candle 2, we have quite a convincing closure. Up close candles followed by a closure below, a change in the state of delivery, confirming the reversal within the candle 2. And now for the candle 3, we want to see an open high low close or bearish expansion candle, since we have failure swing on the way lower, and this low is a great target. So going into the next candle from the opening price, we are crashing lower and expanding, but we are leaving a failure swing here. So we still have the idea of a bearish price. So we want to see some kind of a retracement or a high to be ran, and then expansion again in the direction. And going into the new session, we manipulated this low, but still leaving this as a failure swing equal lows. So now going into the early new session, we retraced higher, manipulated this high, and expanded again lower towards that low RT equal lows. This is very bad price action considering the candle 3. We want to see an open high low close or very clean profile. In this case, we expanded lower, left a failure swing or equal low, then retrace higher. We had a continuation purge and then expanded again in the direction. But this is just to show you how you can trade the candle 3 as an expansion candle with a calm mind, with a one side idea. You don't have to worry about if this is going to be a reversal candle, an expansion candle, or which high will hold. Am I right? Am I wrong about my buys? So you have to skip these things and you have to only focus on a candle 3. This is especially for the beginner which is starting out the trading. We want to completely skip the candle 2 of the swing point and trade only the candle 3. So now we will go over another example. So now going over another example, as you can see, the Wednesday candle took the previous candle high and a continuation. We had a bearish bias. We took this high. We had a candle 2, a candle 3 expansion to the daily fair value gap, and we have taken again the previous candle high. And now we're expecting an open high low close or bearish expansion candle towards this low. So now dropping down to the 1 hour time frame, since we have a beautiful candle 2 closure. Dropping down to the 1 hour time frame, as you can see, this can also be viewed as a consolidation range. We have manipulated the range high and we are trading towards the range low. We have a candle 2 closure with a change in the state of delivery, and we are expecting the candle 3 to be an open high low close or bearish expansion candle. In this case, we have a very small target. So going into the next candle, as you can see, going into the Asian session, we have manipulated this short-term high, and we have a closure below the consecutive series of up close candles, which is that change in the state of delivery, and we're expecting this low to be had as a drawn liquidity. And going into the new session, as you can see, the goal failed to manipulate this low because on the XA Euro, we were weaker and we have manipulated this low, which created an SMT divergence, which is the invalidation upward continuation. And we don't want to trade lower because this low is taken by the XA Euro. So now this invalidates our idea and we will skip this day and we will move into the next day. So now moving into the next day, as you can see, we still have that idea in place. We are inside that daily fair value gap and we have an SMT divergence with the candle 2, which is also a point of interest, SMT divergence with the XA Euro, and we have a change in the state of delivery, candle 2 closure, and we are expecting an open low high close or bullish expansion candle towards this high if we have a small wick. So now going into the next day, now what are the areas the candle 3 can create its wick from? So this is that low. So this swing low is a point where the candle 3 can create its wick and then go again higher in the direction or this order block. Going into the next day, as you can see, we have created quite a small wick from this low. We do have a candle 2 closure in the Asian session. You can trade it from the low of the day, or you could wait for the continuation entries within the newer session. And as you can see, moving into the newer session, we are expanding higher And the London session, we had a retracement entry to a fair value cap, a candle 2 closure, and we're expecting an expansion higher. And going into the New York session, we do have an order block, a candle 2 closure inside that, and we can trade the 9M as an expansion higher. So now going over the idea, the candle 3 of the swing point is the more high probability and easy to trade candles. In the candle 2, we were consolidating, we had a conflicting bias, we could frame it lower with these swing points or higher, but waiting for that candle closure gave us the idea that we have SMT in place, candle 2 closure and expecting candle 3 expansion higher, and we expanded straight towards our drawn liquidity. So the candle 3 entry comes with a cost that you have to wait for the candle 2 to be print the whole day. And as you can see, we found almost 5 entries within this week on EURUSD and gold. And we also are creating swing points on the NQ. The candle 3 entries comes with a cost, which is patience. You have to wait for the candle 2 of the swing point to print. So trading the candle 3 of the swing point removes every type of confusion you have about the price. You don't have to predict the price action, but react to it when we are printing the candle 2 of the swing points. So hope you guys have learned something from this video, and shout out to TTrades. I've learned everything from him. And thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you next week.